What role does central bank independence play in inflation targeting? Imagine trying to steer a ship through rough waters without interference from the crew. That's similar to how central banks operate when they are independent. When a central bank is free from political influence, it can focus solely on keeping inflation in check. This independence is vital for making sound monetary decisions that support price stability. A central bank's main job is to control the money supply and interest rates to keep inflation near a set target. When it is independent, it can do this without worrying about politicians wanting to boost the economy quickly or win votes. This separation helps prevent short-term political goals from causing long-term economic problems like high inflation. Research shows that countries with independent central banks tend to have lower inflation rates and less fluctuation in prices. This is true for both rich and developing nations. When central banks are independent, they are less likely to be pressured into creating too much money to fund government spending. This reduces the risk of inflation spiraling out of control. Inflation targeting relies heavily on the credibility of the central bank. When people trust that the bank will keep inflation near the target, their expectations stay stable. This means workers and businesses don't expect prices to rise wildly, which helps keep inflation in check over time. Since the early 2000s, the United States Federal Reserve has maintained its inflation target at 2%, and inflation expectations have stayed close to that level. Independent central banks are also willing to act decisively. If inflation is rising, they can raise interest rates even if it slows economic growth temporarily. Once inflation is under control, they can lower rates again to support growth. This flexibility helps balance price stability with economic health. In summary, central bank independence is key to effective inflation targeting. It allows monetary policy to focus on controlling prices without political interference, builds trust in the system, and helps keep inflation expectations anchored. This independence supports consistent actions that stabilize both inflation and the economy over time.